Ever heard of Larry Hite? He wasn't exactly your typical Wall Street guy, and that's kind of why we're, diving into his whole deal today.
Yeah, definitely not your cookie-cutter Wall Street story.
Right. So get this. The guy went from like mediocre student to screenwriter, then to, get this, rock promoter.
Seriously.
Yeah. And then, finally, somehow ends up finding his thing in the world of finance.
It's, yeah, unconventional to say the least. I mean, what's so interesting to me is how this, like, offhand joke from a business professor, planted the seed for this whole journey into the market.
Oh, yeah. The one about commodities trading, right? And razor-thin margins. Everyone else is like, ha, yeah, tough business. But Haidt, he saw something different.
He saw opportunity.
Exactly. The thrill of, like, beating the odds.
And that whole thing about odds, understanding probability and risk, that basically became, like, the foundation for his entire approach, you know? Like, he even tossed aside that, what do they call it, the Bible of investing, Graham and Dodd, right?
Oh, yeah, I know that book.
Instead of that, he dives headfirst into a book about beating the dealer in blackjack.
Now, that's just, like, a whole other level of bold, to just chuck that book aside. You can tell right then this is someone who's not afraid to question, like, everything, the so-called wisdom.
Oh, absolutely. Forging his own path.
Yeah.
That independent streak, you see it all through his career. He wasn't about to just follow the herd.
Right.
He had to understand, like, the gears turning under the hood of the market. He wanted a system, a way to approach it all based on, actual numbers, not just gut feelings.
So less intuition, more like a data-driven approach.
Exactly. And that's how he built Mint Investment Management Company.
And this is where it gets really interesting because he didn't do this alone, right?
Nope, not at all.
He brings in a statistician, Peter Matthews.
Right. Got to have the numbers guy.
Had to, right. And a computer systems designer, this guy Michael Dellman.
See, this is crucial, this team. He and himself always said Mint's success, it wasn't possible without them. Their expertise.
Yeah.
They took his ideas and made them, real. A trading system you could actually test,
nice.
actually use.
A real dream team. It just goes to show, even in a field as cutthroat as finance, you need that teamwork, those different angles.
Makes all the difference.
So what was at the heart of their strategy? What were they all about?
Haidt's philosophy was all about consistency, minimizing risk. He wasn't chasing those, flashy headlines, those returns that could vanish overnight.
Yeah, trying to get rich quick, that kind of thing.
Exactly. He was playing the long game.
Smart.
Steady growth, the kind that could handle...
Did it pay off? That's what I want to know.
Let's just say this. They hit an average annual return of over 30%. And this is compounded over 7 years.
Okay, that's impressive.
But here's what's even more impressive, the consistency. Their returns, they stayed within this really narrow band. Hardly any drawdowns, like their biggest loss over 6 months, only 15%.
Oh, wow.
And get this, less than 1% in any 12-month period. That tells you something about Haidt's approach.
That's incredible. No wonder investors were lining up to work with them. It's like he found a way to, smooth out that whole roller coaster ride that the market can be.
Take the emotion out of it.
Right, make it more manageable. So how'd he do it? What was his secret sauce for managing risk?
Well, he had 4 key principles. And the first one is going to sound really simple, trend following.
Okay, so break that down, trend following. What does that actually look like in practice?
So it's all about finding that prevailing market trend and just riding it. Don't try to be a hero. Don't try to outsmart it or predict when it's going to reverse. As Haidt said, the trend is your friend.
So recognizing the bigger picture, right, the bigger forces at play, and just you go with it.
Exactly. Don't fight the current. Fighting the trend, that's a recipe for disaster.
Right.
But riding the wave wasn't enough. Haidt had a strict rule about how much he'd risk on any single trade. It was his golden rule, considered it absolutely essential.
All right, you've got me hooked. This has to be good if it's his golden rule.
The 1% rule. Never risk more than 1% of your total equity on a single trade.
Wow, okay. That sounds incredibly cautious, especially in the world of finance. Was he really that careful all the time?
Oh, absolutely. Now, I know to some people that might sound overly cautious, but Haidt, he understood that even with a winning strategy, you're going to have losses.
Everyone does, right?
Everyone. The key is making sure those losses don't wipe you out. They don't take you out of the game.
Don't put all your eggs in one basket, as they say.
Exactly. By limiting his risk on any single trade, even if he was wrong, he was still in the game, he could live to trade another day. But he wasn't done yet. He had 2 more tricks up his sleeve. Haidt was big on diversification. But I'm not talking about, just a few different stocks here and there. This was extreme diversification.
Okay, now we're talking. How extreme are we talking?
We're talking spreading those bets across a ridiculous amount of markets, global markets. It's like at one point, something like 60.
60. Seriously, I can barely keep track of what I'm supposed to get at the grocery store. How do you even wrap your head around 60 different markets?
Well, remember, Haidt was all about that systematic approach, right?
Yeah.
And he had no problem using tech to handle this kind of wild diversification.
Makes sense.
He wanted to avoid getting caught with too much exposure to any one thing, cast a wide net.
So if one market goes south, he's covered because the others are doing their thing.
Exactly. But he didn't stop there.
There's more.
Oh, yeah. He used multiple trading systems, all running at the same time.
Hold on, multiple systems.
Well,
Now that sounds like it could get messy. Wouldn't they contradict each other? Work against each other?
That's the thing about Haidt, right? He wasn't looking for each system to be some kind of, superstar on its own. He picked them so that together they created this balanced portfolio, like a well-rounded team.
So it's like you've got your all-star team, and each player has their own strengths, but they're working together.
That's it. And that approach, using all those systems, that was key to those consistent returns, no matter what the market did.
Wild. Okay, but you said he had one final trick up his sleeve.
Oh, yeah, and it's a good one.
Okay, you've got my attention. What's this last piece of the Haidt risk management puzzle?
He called it dynamic volatility management. Now, before you think, oh, God, that sounds way too complicated.
Which I am thinking, yeah.
It's actually pretty simple. Think of a traffic light.
Okay, I've got a traffic light in my head. Green, yellow, red.
Perfect. Green, that means go.
Yeah.
Trade freely. Yellow, little caution there, close out what you've got open, but don't start anything new.
And red.
Red means stop.
You got it. Stop trading in that market, even if it means, maybe you miss out on some profit.
So it's about knowing when to hit the brakes, even if everyone else is going crazy for something.
Hit the brakes, exactly. Protecting his capital, that's what it was all about, even if it meant missing out in the short term. He knew if he protected what he had, he'd be ready for the next opportunity.
Slow and steady, right? You could say that. His whole system, it was designed to take the emotion out of it, let him make clear decisions, stick to the plan, even when everyone else was saying something different.
Easier said than done, right? Especially with your own money on the line. But it sounds like Haidt had a system, he believed in it, and he stuck to it. Did he ever talk about specific examples where these principles, they really prove themselves?
Oh, yeah. He was all about learning from experience, his own and other people's. One story that comes to mind involves pork bellies.
Pork bellies? Wait, like bacon?
You got it. So Haidt noticed this pattern. Buy in September, sell before July, almost guaranteed profit.
Sounds too good to be true.
Well, he puts it to the test, uses it with this fund he started with some friends, and it works. Doubles their money.
Okay, now that's got to go straight to your head, right? All that success.
That's what I'm saying. So feeling pretty good, he lets a friend talk him into this leverage play in the corn market.
Uh-oh. That doesn't sound good.
Yeah, and sure enough, a government crop report comes out, and Haidt is looking at a potentially massive loss.
Yikes. That's got to be a punch to the gut. So what did he do?
He actually described kneeling on a staircase, begging for the account to at least not end up in the red. The crazy thing is, he still made money on that trade because of those pork belly profits.
So he still came out on top?
He did. But that experience, it stuck with him.
I bet it did.
It proved a point. Even when you're winning, things can go south fast. And respecting risk is everything, no matter how smart you think you are.
A valuable lesson for sure. Did he have any other stories, anything he saw that really drove home how important it was to stick to his guns, stick to his principles?
He always talked about this close friend of his, a brilliant options trader. I mean, this guy was good, made a fortune, but then he just abandoned his system.
Why would he do that after all that success?
Over-leveraged himself, got greedy, lost it all.
That's awful, to build something like that and have it all disappear.
It just goes to show that even when you're at the top of your game, you can't get complacent.
Yeah.
You can't let greed get the best of you.
Speaking of hard lessons, didn't Haidt have a story about an options trader, someone who actually disappeared?
Oh, yeah, this guy. Worked at a firm where Haidt used to work. Super sharp, but, maybe not the most stable guy.
Okay.
And one day, he just vanishes.
Just like that?
Gone. Leaves the firm holding this big losing position. Now, you'd think they'd just cut their losses, right?
Yeah, what I do.
But the president, he decides to hold on. And wouldn't you know it, the market bounces back. They actually close the position for a small profit.
Talk about dodging a bullet.
Yeah.
But I have a feeling there's more to this story.
Oh, yeah. You see, the president, he mistakes that lucky break for skill. Thinks he's invincible now.
And we all know overconfidence can be dangerous when it comes to risk.
Tell me about it. Less than a year later, same president, he's on the wrong side of another huge position. This time, instead of just closing it out, he tries to dismantle it piece by piece.
Trying to be clever, huh?
You know it. And by the time he's done, wiped out the entire firm's capital.
Ouch. Goes to show, yesterday's luck doesn't mean you're a genius today.
That's it. Sometimes the best thing you can do is just accept that small loss. Avoid that much bigger one down the road.
Totally. So Hite uses this story to show how important it is to have a system, right? A clear way of managing risk and, more importantly, the discipline to stick to it.
Discipline, that's the key. Don't get tempted by shortcuts, no matter how good they look at the time.
These stories really highlight something that's often overlooked in finance, the human element.
Oh, yeah, for sure.
Even the smartest people, they make mistakes. They let their emotions get the best of them.
Absolutely. And for Hite, understanding those psychological pitfalls, that was just as important as the numbers, the charts, all of that. He knew how our own biases can mess with our judgment, lead us to make bad calls.
And those biases, they're not just in finance, right?
Nope. They pop up everywhere.
Anywhere. Decisions are made under pressure.
You got it. One bias that Hite was really wary of, that was the allure of small profits. He saw so many traders fall into this trap, take a small win and run.
Instead of letting those gains grow.
Exactly.
So you got to have the patience, the discipline to let those winners run.
Exactly. And it goes right back to his philosophy, right? Trend following, find those big market moves, those waves, and just ride them. Don't get shaken out by every little bump in the road.
It's all about seeing the bigger picture.
You got it. So we were talking about Hite's insights into common trading mistakes.
Oh, right. What else did he notice? What other traps did people fall into?
He always used to say how people get seduced by this thing he called personal bias. Basically, they rely on their gut feeling, anecdotes, stories they've heard, instead of hard data and actual analysis.
So they ignore the numbers, even when the numbers tell a different story.
It happens all the time. He'd always bring up this well-known financial commentator who just swore by bonds. Bonds were the cornerstone of any portfolio, according to this guy.
But bonds, they haven't always been a sure thing, right?
Exactly. And Hite pointed out that this commentator had probably only seen interest rates go down, which is good for bondholders, maybe a handful of times in his whole career.
That's not a lot of data points.
Not at all. But he clung to that belief, his limited experience, even when the numbers said something else.
A good reminder that even the so-called experts, they have blind spots. And data, when you look at it objectively, can challenge even your most deeply held beliefs.
Absolutely. And that brings us to another really important part of Hite's approach. He valued different perspectives, learning from other people. He was always eager to pick up something new from other traders. He knew that even the best of the best can benefit from someone else's point of view.
So who were some of the big influences in his life?
One name that comes to mind is Ed Seykota, another legendary trader. He was all about that systematic approach, just like Hite.
Okay, yeah, I've heard the name. What did Hite learn from him?
Hite gave him credit for teaching him a valuable lesson about the link between risk and the ups and downs of returns to the volatility.
All right, so how did Seykota explain that?
He kept it super simple. The more you risk, the more volatile your results will be. Looking back, it seems kind of obvious, right?
Yeah, it does.
But so many traders, they forget that when they're chasing those big wins.
Right, that classic trade-off. Risk versus reward. Bigger potential upside, bigger potential for things to go really bad.
Exactly. Hite was also fond of talking about what he learned from Jack Boyd. Remember, that was the trader who first hired him as a broker analyst.
Oh, yeah, early in his career. What was Boyd's thing?
Boyd was all about spotting those major market trends, and he was good at it.
So what was his secret?
Hite loved telling the story of how he once asked Boyd how he always seemed to find those winning trades. Now, keep in mind, Boyd was a pretty imposing guy, and what does he do? Throws his charts on the floor, jumps up on his desk and shouts, "Look at it, it will tell you."
Wait, that's it. What was he even pointing at?
Hite took it to mean that you got to zoom out, forget those little day-to-day price changes, and see the big picture.
It's about seeing the forest for the trees.
Bingo. And Hite, he really internalized that, built his whole trading philosophy around finding and riding those massive market movements.
Crazy how those impactful lessons can come from the most random places. And just like that, a shift in perspective can completely change everything.
No doubt.
Yeah.
And that openness to learning combined with his discipline and rigorous analysis, that's what allowed Hite to reach a level of success most traders only dream of.
That's really inspiring, It wasn't just luck. It was hard work, it was dedication, learning constantly, and never forgetting about risk.
And that takes us to a question that Hite would often ask. If you trade every market the same way, as he suggested, does that mean you think optimization is pointless?
Optimization. Refresh my memory. What's that again?
So it's when traders use past data to tweak their systems, trying to find the settings that perform best in the past, figuring, hey, it worked then, it'll work again.
Trying to find the magic formula, the one that guarantees future profits.
Exactly. And that's exactly why Hite was wary of it.
Because the past doesn't predict the future.
Right. He believed that getting too caught up in optimizing for the past meant that traders might miss the bigger picture, building a system strong enough to handle the inevitable curveballs the market throws at you.
So don't build your system for yesterday's weather. Make sure it can handle the storm that's coming tomorrow.
Exactly. Haight had this saying, "It is incredible how rich you can get by not being perfect."
Love that. Sometimes good enough really is better than chasing some ideal that might not even exist.
And that right there, that focus on a system that can roll with the punches instead of obsessing over past performance, that speaks to a core belief of Haight. Trading isn't about predicting the future perfectly. It's about managing risk, seizing opportunities when they pop up, and being okay with the fact that sometimes you're going to lose.
Don't go all in on one hand. It's about the long game,
Yeah,
right?
exactly. And that brings us right back to two of Heat's core principles. They might seem simple, but they're actually really powerful when you really think about them.
So these two core principles, help me out here again. What were they? The ones you said were like deceptively simple, but super important.
Height, put it this way. First, if you don't bet, you can't win. And second, if you lose all your chips, you can't bet.
Okay, yeah. I mean, on the surface, that sounds like, pretty obvious stuff. Common sense, right? But I get the feeling he wasn't just talking about poker here.
Oh, definitely not. In the context of, his whole approach to trading, to risk, it takes on a whole new meaning. That first principle, if you don't bet, you can't win. He's not saying go gamble recklessly, right?
Right.
It's about taking chances, sure, but calculated risks.
So make a move, but don't be stupid about it.
Exactly. You got to be in the game if you want to see any reward. You got to put something on the line.
But always within reason, always protecting yourself.
Right. And that's that second principle, right? If you lose all your chips, you can't bet. That's where it all comes back to protecting what you've got.
Don't bet the farm.
Exactly. It's not just about winning those bets. It's about making sure you can stick around long enough to actually see the payoff from your strategy. Protect those resources so even when you hit those bumps in the road, and you will, you can still stay in the game.
Kind of like that story Hoot told about his friend, the options trader who lost it all, right?
Oh, yeah. That one was tough. Sad, really.
And it makes you think, what was going through his head to throw it all away like that?
It's a classic case of what not to do.
Yeah.
And to really drive that point home, Hoot would often contrast it with the story of the Hunt brothers and their whole adventure in the silver market.
Oh, right. The Hunts, weren't they like crazy rich?
Loaded. But they thought they could control the market, manipulate it, and, well, it blew up in their face.
Big time. What a mess that was. A very public and very painful financial downfall.
Yeah. Nobody wants to end up like that. And it just goes to show, no matter how much money you have, if you don't respect risk, it can all disappear.
You're not invincible, that's for sure, no matter who you are.
Right. And this actually takes us to, I think, a really interesting point that Haight would often make. He really believed that those core principles of his diversification, trend following, they weren't just for Wall Street.
Oh, you mean they could apply to, like, life in general?
Exactly. Careers, relationships, even just dealing with the ups and downs of everyday life.
Now, that's something I can relate to. So how do those concepts, which seem, very financy, how do they translate to something like, I don't know, career choices, relationships?
We'll take that 1% rule, for example. Let's say instead of putting all your energy into one single project at work, you've spread it out a little.
Okay, so not putting all your eggs in one basket.
Right. Work on a few promising things at the same time. Or maybe you try to create more than one stream of income so you're not relying on just one thing.
Diversifying your income, that's always a smart move.
Right. It's like diversifying your skills, your experiences, even your relationships. That way, when things change, and they always do, you're more adaptable.
Makes sense. More resilient.
Exactly. And then there's trend following. Think about it. Instead of always trying to fight against the tide, what if you spent some time trying to spot those natural trends in your own life, those currents that could, carry you towards something better, something more fulfilling?
So it's like knowing when to stand your ground and when to just go with the flow.
And being able to tell the difference. It's a big question, right? Haidt really challenged people to look beyond just the mechanics of trading, to see those deeper principles at work. It's a pretty cool idea, right? That the same stuff that leads to financial success could help you navigate all the other crazy stuff that life throws at you.
It really is. It makes you think, for sure. And it sounds like Haidt really believed that too. He once said, "My experience with the markets has taught me to look at the world in a very specific way, to see the underlying patterns and trends that drive events."
He was definitely onto something.
This whole deep dive, this look into the life and philosophy of Larry Hite, it's been fascinating. Where he came from, his whole approach to risk. I mean, this guy's story just goes to show the power of thinking for yourself, having discipline, and always, always respecting the unknown.
Absolutely. And maybe the biggest takeaway is this. Real success is not just about winning big. It's about weathering the storms, coming out stronger, and never, ever giving up on the game, whatever your game might be.
Words to live by.
Hmm.
And on that note, we'll leave you with those thoughts. We've spent this episode diving deep into the mind of Larry Hite, and we hope you've walked away not only understanding his approach to risk management, but maybe even picking up a thing or two you can use in your own life. Until next time, keep those minds open, keep asking those tough questions, and keep diving deep.